Hey guys, Jeff with OptionBoxer.com, back with another video today. Want to look specifically at making a trading plan. This is my trading plan. The information I'm sharing with you today is the actual trading plan that I use. Before we get into any of that, please know that I am not a registered financial advisor, and I do not suggest you trade or make investments the same way I do. In fact, you may look at this trading plan and all kind of flaws with it because it's not yours. And so I wouldn't suggest you trade the way that I trade exactly. But I didn't want to create a fictitious trading plan, filled with hypothetical information. I wanted to show you exactly what I'm using. But again, I'm not a registered financial advisor, and this is just information that I'm sharing with you. Hopefully you can gain something from it and then take it from there and make it your own. Every strategy that we look at here in the next couple of pages of this trading plan, you can see there's 20 of them, just so you have an idea of what we're getting into really quick. The video should be fairly short, maybe 10 minutes after I edit it down. But regardless, every strategy that you see here, I have discussed in detail, in length on my Option Boxer YouTube channel. And I certainly encourage you to go check some of those out. But starting right here at the top, I am a man of faith, so I've got this, kind of this green box. So every time I look at this, I have this there to remind me, and just to remind me, God is still in control. He's still on the throne, and it doesn't matter if I lose $10 million. I can't take it with me when I go. So it really, at the end of the day, it doesn't matter. So God is still in control. Earnings ultimately will drive the market, even if the market crashes. As long as there's still companies out there producing products and offering services, and people still need those products and services, ultimately the market will come back because people still have to pay for those things. Nobody can time the next crash, so we don't know when the next .com bubble is going to bust, or if we don't know if the current state of the market's going to end in a market correction. I'm sure it will at some point, but we don't know when. And so it doesn't matter. It's no use to us trying to time the next crash. We just have to remember to stay invested and try to be as smart as we can about how we manage our money. Only adjust the plan if the spreadsheet data suggests the changes needed. So I created a spreadsheet that is basically tied to this investing plan, or this trading plan, and so everything that we're going to look at here in just a moment is all connected to that spreadsheet, and it gives me the numbers that I want to see. And so there's no reason for me to change if I know that the data is still in my favor. So again, that's what that point is. And then it's just money, so let it come, let it go. But we're going to look through here really quick. Sorry, that took me a little longer than I anticipated. But this is just my accounts. I won't go through every line of detail on every page, but basically the way I've broken it down for every account that I have is, I've got my IRA account here. Is basically all I'm trading in there is covered stock and dividends. So I won't trade any stock that doesn't offer a dividend that I find attractive. I'm going to utilize 80% of the capital. I've got 10% kind of reserved for just whatever strategy kind of strikes me at that moment that I think is fitting for the IRA account. Again, that could be anything throughout the year, but that way it's just a small percentage, and that way I have a little cash there that I can play around with if I see something attractive. And then I'll just at all times have a 10% cash reserve. Again, that way if I ever, let's say I'm invested into a company, I've got 30 shares or something of a dividend stock that I like, and out of nowhere the stock sinks by 20%. Well, I'd like to have some money there to be able to average down my price or my cost basis, and possibly get some more shares at an even better price and lower the overall cost. So again, just having 10% in reserve makes sense for me. And currently I'm contributing $200 a month, based on my day job and what it affords me, which I'm very thankful for. You may be able to contribute more, maybe less, whatever it is. It's never too soon to start saving. And then of course I'm going to increase the contribution over time to my max IRA limit. And then this goes into the actual covered stock requirements. Again, I broke this down into as simple but as detailed rules as I could follow. Too many rules and I won't follow it. Too few rules and it's not effective. So it's one of those things you got to find a happy medium. So far for me, this seems to be working. But this is a fluid document. If I haven't said that already, this will change as the spreadsheet data suggests that it needs to be changed, or if I just see something that just doesn't make sense. It's kind of grown into 20 pages since I started this, maybe a year or two ago. and it's kind of metastasized into what you see today. But just to go through this one again, I won't go through all of them, but just to go through this one to give you a little insight into what I'm looking for. When I'm looking for a covered stock, I don't want any more than 200 shares of one company. I just don't want to be too heavily invested into one specific basket. I'm going to sell calls every 30 to 90 days, whatever premium I find official or attractive. I will say this: when I sell covered calls, I always pick a target price. Investment requirements, very simple. It must pay a dividend, and the price is going to be at the lower standard deviation lines. But the standard deviation lines, which you've seen on my channel before, it must be at this lower green one, preferably even at the second or the 2 standard deviation line. Even better if it's at the 3 standard deviation line. I just want to see a stock that's been beaten up a little bit. That's a good stock. It pays a nice dividend, and it looks like it might be showing room for improvement. Call requirements at the target share price, like I've already discussed. Investment exit shares will be called away. That's the only way. Once I get in, it's the only way I'm going to get out. I'm not going to sell the shares. If anything, I would average down to start collecting more shares to do a second covered call, so long as I only had 100 shares and I could start working up to 200. And then the call exit, it either expires worthless or it is exercised. So that's all the rules. Some other considerations, some things that I've noticed along the way trading this way is I'm going to use the standard deviation channels to identify buying opportunities if the shares are called away. So just kind of something I just said. If I do get the shares taken away from me, I'm going to wait until if I want to get back into that stock, I'm going to wait until it trades back down to the standard deviation line for a couple of reasons. Number one, because it's more attractive once the price has been pushed down a little bit. And 2, because it doesn't affect me when it comes tax time. But I'm not a tax advisor. Please make sure you speak to an accountant or a tax professional for that. Protective put can be purchased if needed, and then over time, I'm looking to diversify across the sector. So I'd like to have my toe in the water in every sector and trade this way. Some notable companies here, which does encompass a number of sectors, and they're all stocks that I think are good, that I want to own, and they pay a nice dividend. So there's that. And this is the last strategy we'll really look at, but I want to go through this one as well because this is my cash account. This is where I trade most of my options. And so the reason I want to look at this is because I broke it down again as simple but as detailed as I possibly could. And then I'll show you something that I've added here that I think maybe a lot of people don't do, and that gets them into trouble. So capital management, kind of the same as above. This time I'm going to use 75% of the capital. I've also got the criteria here for my chart settings. So I'm going to use the 1 year, 1 day chart. Here is what I'm looking for. Kind of something a little different maybe than I've talked about here before, or maybe you've seen elsewhere, is I leg into my iron condors. I know there's probably a number of you that would say, oh, that's terrible, don't ever do that. But to me, it makes sense, or it gives me a chance to kind of see where the market's going to go before I open that second leg. So it makes sense for me. Again, maybe not for you. Trying to maintain a 50-50 risk to reward profile there. Trying to get, if I open a $5 wide spread, I want to try to get to $2.50 in credit. And then I'm going to close at expiration or the week of expiration. And then the cool thing that I've added in here that I don't know if others do, maybe they do, maybe I just have never seen it, is I went ahead and added some markups onto a chart of what I'd be looking for. I always have this to refer back to, and it shows me exactly what I've back tested myself, what I've proven to be effective for me, and that way I can always come back here and figure out exactly what I want to do, how I want to do it, and that way I always continue to do the same things over and over again. If I rely strictly on my memory or my mood, you never know what I might do any given day. This may look like a great iron condor trade today. Next week I may look at it and say, oh, this thing's bearish. I've got to take a directional position. But that's it. And I go through this on a number. I've got several different option strategies you can see. And I'll just kind of skim through here so you can see them. And there's a little more complex one. And I even put in there where this was not favorable, and I wanted to show myself, hey, you don't want to trade it right now. So I just wanted to make sure I got all the details there. That way I can see exactly what I thought, when I back tested it and what I knew worked from those results. If I just rely on my memory, I'll know I did the back test. I'll know it works. But I may forget, or my mood may be different, and I may see something that I don't want to see. And then so I've got a number of different options trades that I do regularly, And so we'll scroll down past those. Again, got pictures for all of it. So I also have to trade options daily. If I have time away from work, of course, I don't do it while I'm at work. I can't focus, and I've tried and it didn't go well. So I keep 25% in reserve. That way I can trade daily when I have days off, and that way I can take advantage of any setups that I find there. And here's the way I trade daily. Again, super simple, but detailed enough. It shows me what I'm doing, how I'm doing it. That's the information there for the daily options trading. There's the way I trade it, what I'm looking for, and you'll see it's on the 1 hour chart, 10 days, 1 hour. Again, I've got the chart criteria there. My Tastyworks account is all about poor man's covered calls. I do nothing but poor man's covered calls. There's the information I use right there. And then there's, again, the chart of what I do. My Webull account is I just buy ETFs and hold on to those. And then in my Robinhood account is long-term investments, looking to try to turn 50% profit. But that's pretty much my trading plan in the whole. Again, I don't suggest you create one just like this, but it does give you an idea of, kind of some of the things you need to consider. This works for me. You may need to have a much more detailed trading plan for it to work for you. But in my own experience, the simpler it was, the more likely I was to use it. If it got too inundated with rules and different things that I had to look at or do, or be in the right place at the right time, it just became too much for me to use, and it just never was effective for me. And it was always pretty quick for me to say, okay, I'll just do it this way because I don't have time to go through all these rules. And because of that, I went ahead and took all that information you just saw and shorted up to where it's literally on 2 pages. And I have these 2 pages sitting on my desk. They're in my backpack that I take them to work with me. And it has everything you see from the trading plan, except it's in less detail. That's the way I do it. I hope you guys like it. If you have any questions about it, feel free to reach out to me. Again, you can reach me at jeff@optionboxer.com. If you like the videos I create, or you like the channel, or if you like this video, please do consider liking and subscribing. It doesn't cost you anything, doesn't hurt you in any way, and it really helps me out. So I do appreciate you guys taking the time to watch it. But again, feel free to reach me in the comments or at jeff@optionboxer.com. All right, see you soon.